Welcome everyone. Today we are going to determine what price you should pay for Microsoft stock using my cash flow model. But before doing that, I want to mention a few things about Microsoft, including the artificial intelligence opportunity. Let's start with artificial intelligence. Microsoft and Google are in the news a lot recently because of this. It seems that Microsoft is winning the AI battle over Google. However, as I mentioned in the Google video, this is something very new that I am not going to take into account when doing the cash flow model, because we don't have sufficient information yet, and it's too early to predict the future of artificial intelligence. It's a new business that just started and is generating zero revenue at the moment. However, it looks like a good opportunity both for Microsoft and Google. Secondly, Microsoft is an amazing company. They have an amazing moat. On screen, you are seeing the revenue breakdown. And as you can see, Microsoft is part of our lives. They have the cloud business, the Office products, Teams, Word, PowerPoint, Excel. They also have Windows, they own LinkedIn, etc. This is a company that is not going away and is going to stay for a lot of time. Finally, before doing the cash flow model, Microsoft has an amazing balance sheet. They have very low debt. If we look at their balance sheet, they have $169 billion in total current assets and $198 billion in all liabilities. So they can almost pay all their debt when they want, which is awesome. Microsoft is a company that I like a lot and I want to own. Now the question becomes, what price should I pay for it? Because you can overpay for a good thing. In order to determine what price I should pay, I am going to use my cash flow model, which tells me at what price I should buy Microsoft based on my assumptions. We don't know the future. However, we can make assumptions about it to see what I should pay for a future stream of cash flow. And I am going to do a 7-year analysis. Starting with my revenue growth assumptions, over the last 10 years, this company has grown 10%. Over the last 5 years, they have grown 14%, and last year they grew 10%. And in terms of what analysts are expecting, this year they are expected to grow 5% and next year 11%. With all of this in mind, I went for 6% for my low assumptions, which I think is low, 9% on my middle assumptions, which I think is probably what they are going to do, and 13% on the high in case they crush it. Their profit margin is very consistent and it has been improving. Over the last 10 years, they've had 28%, over the last 5 years 33%, and this year they had 33% as well. So I went with 28, 31 and 34. And their free cash flow is even more consistent, as they've done 30% over the last 10 years, over the last 5 years and this last year. So this is why I went with 28, 30 and 32. Moving on to PE and price to free cash flow, the average of the stock market is around 15 to 16. However, you should pay a premium for a company as good as Microsoft. So I went with 17, 19 and 21. And remember that you should not compare the PE and price to free cash flow with the company's average, but rather with the average of the stock market. Finally, the discount rate is the return you want to get each year on your investment. When you invest in an ETF, you can get 9%. So if you take the risk of investing in an individual stock, you should have a higher return. And as your assumptions get higher, your rate of return should be higher. This is why I went for 10, 11 and 12%. According to my cash flow model, if you believe the high assumptions, this stock might be a buy. I personally believe that you could make the argument that Microsoft is a buy today, but I think it's a bit expensive and I am going to wait until it reaches around 180 to start a position. I hope you enjoyed the analysis and I'll see you on the next one.